As we explore what's going on with markets globally, in addition to Japan, we're seeing weakness across the globe with the ETFs tracking Brazil and Mexico hitting their lowest levels since March and of January 2023, respectively. Paul Christopher is head of global market strategy with Wells Fargo. Why is it always August, Paul? Why?
When we all want to be on vacation, right?
So I guess I'll start. I mean, and there is an aspect of this where you could say, it's thin liquidity. It's, maybe senior folks who aren't on desk. I mean, there are reasons often, but I think even back to the debt default crisis in 2012, we've been through a number of these. So here we are wondering if this is something fundamental or not. And I wonder what you think it comes down to.
Yeah, it really comes down to the sort of risk levels of the risk readings that we've seen on Friday, and then especially again today. Coming out of Friday into the weekend, it looked like people were wondering if the U.S. was going to have a recession. If the U.S. has a recession, it typically drags other countries down with it. And so you have a sell-off in Europe. And then Japan gets open, and what you see is a huge sell-off there. Keep in mind that a lot of those Japanese investors are coming to the U.S. to buy stocks because their market really doesn't do much. And when you get risk-off moves like Friday and then again today, those investors will switch to bonds and they'll hedge. And when they hedge, what they're doing is selling the dollar forward. They're buying yen. So you take a yen that's gone from 162 to 150, let's say, in the last month, and then you add on all that extra hedging to buy U.S. Treasuries because of the risk-off move, and you've got another huge move higher in the yen to 140, 142 per U.S. dollar. And so when that happens, now you get more selling in the Japanese market, not just because of what's going on in the U.S., but because the yen has strengthened, and that's going to hurt the earnings of a lot of Japanese companies that are exporters.
Explain that to me one more time, for sure, as if because I think this is so important, and we're all trying to understand the next leg of this, right? So what would you be watching for in terms of the yen, treasuries, and so forth, as to what happens in the next couple of weeks' time?
Well, we've got to get some sort of consensus back in the market about what's going on with the economy. Our view is that the economy is still heading for a soft landing. What we've seen so far is not inconsistent with that view. And so there might have been an overreaction. There might have been a knee-jerk when the employment numbers missed last week. But once we get that consensus back in the market, then you're going to start to see treasuries come back up. Yields are starting to come back up a little bit this afternoon. That would be a good sign. It would mean that there's not panic anymore, that we're heading back up towards where we were, closer to 4.25 before. And that would do internationally, it's going to reverse some of those risk haven trades and help the yen to come back down a little bit. And then the Japanese market stabilizes too. So essentially, it comes down to that consensus on what's going to happen with the U.S. And then from there, the yields come back to more recent levels, and we see the panic go away.